Hi everyone, my name is Brad Dunn. I'm the Key Relationship Manager here at Westbridge Funds, and today I'm joined by Phil Anderson, our Head of Developments. G'day Phil.
Hi Brad, how you going?
So today we're going to be talking about the residential development market outlook. Now, the biggest part of this outlook obviously has been what's been happening in the construction costs side of things over the past 18 to 24 months. Can you tell us a bit about it?
Absolutely. So I'm sure everyone's seen it in the papers. Construction costs have been rising and the rises have been significant, in the order of sort of 30 to 40% over the last 18 to 24 months. I don't think anybody can put their hand up and honestly say they picked that, and certainly it's had a big impact across the industry. So we've seen a lot of projects put on hold or delayed, particularly in the larger sort of commercial scale developments, apartment development projects. The contingencies in feasibility simply can't absorb that sort of cost increase. So to counter that, we need prices to moderate, or we need sales prices to increase and catch up with the rate of construction cost increase.
Okay, well, before we talk about demand supply, let's talk a bit more about the construction costs. Has it just been materials or is it labour? What's going on there?
So it's been everything. There's supply chains have been impacted across the globe. So materials have been an issue, and getting materials into WA, and labour as well. So pretty much every industry, I think, in WA has had labour shortages. We're starting to see that improve. We've got migration increasing, both international and also from interstate. So hopefully over time that's going to improve.
Once again, that's probably good for the demand supply, extra migration. But what about easing of costs? How are we looking there? Is it starting to slow down or come back a bit?
It is. So I don't think it's going backwards, and we're not expecting that it will. But the rate of growth has certainly moderated. The last 4 consecutive quarters, we've actually seen that rate of growth slow down, which is positive as well. So that's adding a bit more certainty to our feasibilities and builders as well. So we're not seeing as much construction contingency in build prices for risk, and we're also seeing an increased appetite in builders looking at projects in the next sort of 12 to 18 months.
Fantastic. So on the flip side, let's talk about the demand side. So apartment supply, everything's been put on hold, nothing's been built. How are we looking now?
So the supply side has been hit very heavily by these construction cost increases. In September 22, we had the lowest level of completions that we've seen in 40 years, which is phenomenal. New projects have been put on hold, as we said. Urbis are reporting that in the year to date, we've only seen 2 new projects come to market against a typical 17 projects per annum average for the last 5 years, which is a huge drop.
Yeah, wow. And then you factor in all of the people coming into the state, like migration. I think it was high school economics. What was it? Demand and supply. When there's a heap of demand, no supply, what happens to the prices?
That's right, they go up. So the demand side of the equations is strong. WA's economy is performing very well. It's an attractive place to live. There's migration coming through here. You've got that low supply, so prices are naturally starting to go up. So we're seeing on some of our existing completed projects, prices 30% higher than we sold them at a few years ago. And that's what we need to catch up with those construction cost increases. Yeah.
Well, speaking of our projects then, we're seeing prices come up. How's that impacting our projects existing and going forwards?
So the positive demand thing is that demand is very strong. We've got migration coming to WA. It's an appealing place to live, and the economy is going well. So demand is good. Prices are going up as a result due to low supply. We're seeing some of our existing projects in Highgate and Eastvic Park selling for 30% up on what we originally priced them 2 years ago, which is a positive. And we're seeing those square metre rates sort of get up to the point where feasibilities are stacking up again for existing projects. Okay.
What about demand for apartments? They've always lagged behind townhouse and houses. How's that looking?
So we've hit a tipping point probably in the last few years in WA. The apartment market has matured. There's a lot more acceptance of apartment living, which is positive, and we need that. Perth has got a forecast population of 3.5 million in Perth and Peel. We need to fit those people in somewhere, and state government has a strong focus on infill development, which is positive for us as well. Yeah. And certainly there's opportunities in that space.
Oh, 100%. I think I saw somewhere that WA had the largest migration coming into Australia in the past quarter, and a lot of these migrants are used to living in apartments all around the world. They don't see any difference. So.
Absolutely. So they're used to that sort of living. They're bringing that back. Some of it is actually expats coming back from overseas as well, moving back to WA post-COVID. But also it's locals. Locals are starting to see friends living in apartments. They're seeing what the lifestyle offers and the benefits of it. So certainly we're getting that tipping point of people moving towards apartments.
All right, so going forwards, what's our strategy?
So we do see opportunities in the apartment market, and we're certainly starting to focus on that again. Maybe not projects that we're ready to launch right now, but trying to get things into development approvals, ready to launch over the next sort of 6 to 12 months. Certainly we're seeing those construction costs are moderating, and the demand is there, and prices are moving to the point where feasibilities are working on apartments.
That's fantastic. So townhouse and apartments we can look forward to?
Yeah, it's a little bit of both, and certainly our focus is on those A-grade sites, near city, western suburbs, where you've got that high demand, and particularly the resilient owner-occupier market, where interest rates aren't as much of an issue. They don't have mortgages or smaller mortgages, so we certainly see that as an opportunity moving forward as well.
Fantastic. Our investors, I have to admit, love the fact that we could potentially put an apartment block on something, and instead, when we feel it's probably better for townhouse, for example, our Cottesloe fund, we just look to what's the most suitable thing for the best block of land. Right?
Absolutely, and that's knowing that market and putting a product out there that people want. So what do people want in Cottesloe? A nice property, good views, and that sort of downsizer product. So
fantastic. All right, thank you very much, Phil. Well covered. If anybody has any questions that we may have missed or would like further information, please contact us anytime. We'd be happy to help. Thank you.